Hey, I'm Mike, Grain of Salt, and we're here with Dan Hillary. Dan,
Hey,
how you doing?
Grain. Good. Glad we're doing this. We're going to keep it super brief and quick for everyone listening. We're just going to cover substance for about 20 to 30 minutes. And hopefully, this will be helpful looking at the Bitcoin credit market.
Right, we decided this. We don't have a name for what this is going to be called. We're going to do it a weekly basis. Typically, we'll do it on Tuesdays. We'll record it and post it, and then we can do a space afterwards to answer questions about it. But this is not financial advice. This is our analysis of where we see the market currently going and what we think indicators that we track and look at. So again, this is not financial advice. In terms of full disclosure, I am a GP and both an LP in STRE Capital, and I have no investment or trading authority in that at all. So Dan completely runs that as the CIO with the other Dan. But basically I talk to Dan on a daily basis. That sounds about right, Dan?
That's pretty much right. Yeah. I mean, we got Q4 a little bit wrong here, but we've been managing our principal and capital for investors. So I have a pretty positive outlook over the next year, a couple 2-year time frame for Bitcoin. And I know it's been rough and the cycle hasn't been how people expected it to play out, but I think protecting your chips is the only way to play it. But I think as the fear ramps up, there will be more and more opportunity.
Yeah, totally agree. So today's it's November 4th. It's about 10 minutes to market close for equities. Bitcoin is right about $100,500. We've seen this price drop in this. One of the things that happened a couple weeks ago when Binance had the liquidation problem, people were like, "Well, this doesn't look good at all." And what I was saying was, if it retook 114,000, then it would be bullish. It would be cautiously optimistic. So that did happen. But then the CME futures rolled over last week. As everybody knows, the CME Bitcoin futures, which are cash settled, those rolled over the last full week of every month. What happened? But things were looking good on Monday or Tuesday, and then we had weakness. And the key part of the weakness, Dan, that we talk about is the US government shutdown. And the reason why the US government shutdown is because they cannot agree on a fiscal budget. So the longer that goes, the more the market is jittery. The problem that exists with the reverse repo and the general account, the TGA. And so what happens where we are today is that uncertainty is causing the stress in the markets. And we saw good numbers that came out over the past week, but now it's like, what's going to happen over the next few weeks? What do you think is happening with the U.S. government shutdown?
Yeah, we saw the SOFR rate blow out above the Fed funds rate. And I mean, it's going to be difficult moving forward until we get sort of aggressive stimulus and quantitative easing, which could be in the next kind of 3 to 6 months. So it's easy to want to load up on short dated calls to the end of the year in Bitcoin. But I think the only way to play the next few months is really looking out over 2026, completely abandoning this idea of a 4-year cycle and looking at kind of a power law adoption curve. There's just no other way. I don't think you can say like this is going to V-shape recovery necessarily. It may, but you have to be prepared for all circumstances. When there's no liquidity in the market and it's not a catalyst-driven pullback, I think you have to be a little bit more careful.
I totally agreed. In my accounts, I'm sitting in spot. I'm not sitting in anything that I'm looking at. I have no leverage. I don't have any hedged positions. I'm just sitting out in spot and in some cash until I see the market begin to turn around with the specifically the U.S. government shutdown and the fiscal budget being signed off on. What I do know is that there is basically a $2 trillion shortfall in the fiscal budget for the U.S. There's no way around that. They will print. There's no way around that. They will cut interest rates. The Fed chair will be replaced. You talked about this in your investor letter for last month, right? And the going contender is what's his name? Steve Mirror, whatever. Yes, to replace him. And so with that, we know that this is going to happen. We know that they have to cut rates. So what else are you what other indicators are you looking at?
Macroeconomic wise, I think the business cycle, there's two different pictures, especially kind of a month ago. There are two, I call it kind of like a two-headed dog. I mean, you've got the liquidity cycle and the macro cycle. And the broader liquidity cycle is still positive, but it's starting to peak. I mean, that's kind of a Michael Howell global liquidity index indicator. I don't know how super, correlated that is to Bitcoin. On a shorter term basis, liquidity is tanking in the market. It's just getting sucked out of the system. And I think that's really the driver of price action right now. But then you also have the business cycle, which has just been dog shit since 2023. PMIs, both services and manufacturing, have been below 50, so in a contractionary period for the last 2 years. And so the expansion of liquidity in 23, 24 has been the main driver in assets. And then obviously the decrease in interest rates and what will continue to be a decrease in interest rates to hopefully a kind of 3% stable rate. I mean, inflation's bad, but it's not necessarily ticking up. And we've seen employment, teetering on the brink of falling off a cliff. So I just don't think that the general business cycle conditions are conducive to a blow off top. And I think a lot of people, they think, oh, Bitcoin just blows off every 4 years. And that's not going to happen unless we see positive business cycle conditions. And that's what we haven't seen. So that's why Bitcoin is, taking a hit.
Yeah, I totally agree with what you just said. I think what people have to look at, and this is what I look at, is that whatever expectations you have being in Bitcoin and looking at what goes on, each cycle is different. And you're like, oh, this time is different. Yeah, it is. I as much as I wish that we were back in 2017, if I go back in time, the 2016, 2017 cycle was awesome. Bitcoin started 2017 at $1,000 on January 1st and almost hit 20,000. It did a 20x in 1 year. So the years of that happening again is unlikely, right? But with that said, the new macro environment that we're in is just as we described. They have to print $2 trillion. And that's monetary debasement. As long as inflation and monetary debasement in the US is about 6.5% a year over the past 25 years. But if CPI stays stable at 3%, and somebody's going to be like, well, what's the shadow CPI? It doesn't matter. As long as it's stable and it's 50% above their target of 2%, they're going to just print. But I think we should shift gears into a digital credit. I think that we got a lot of information over the past few days, and we had the Q3 earnings report for Strategy. You want to give me your view on that? What you thought?
Yeah, let's do it slide by slide, Grain. From Stream, we'll talk briefly about Strive's new product. And since we're not really affiliated with Strive, we can go into detail. And we'll talk about how we're looking at kind of currency swaps and different, currency markets around the world. I think this is the next phase for Bitcoin as digital credit. So you want me to share or you want to share?
Yeah, you can share it on SATA for Strive because I don't have that one pulled up right now. I do have the both Strategy presentations, but if you can do for Strive, that'd be great.
Okay, let's
You
go
have that ready?
start with the strategy. Let's start with the strategy for now. So go for it.
Sure, sure. So let's talk about Strategy while you're pulling that up. So we've already had previously. This was all well known. What happened in their Q? They've talked about this many times before. We already had the capital stack that existed for um, STRK. I want to go to the key slide here. Oh, you pulled up that slide here. You have Stripe and Stream. So STRF already existed, and what they did is they've launched STRE, which is the euro-based version of STRF. Uh, and basically, you can see that this is a fixed dividend, and what they'll do from that is, wow, that's an interesting change you did there.
Sorry, Greg.
Okay, just leave it at that. So where we see this is where it sits in the capital stack. When I saw this, and they had hinted towards this in their Q3 earnings report that they would either do Europe or Canada next. And I knew that they would do Europe next because it's a much bigger market. So from that perspective, they look about the same. The second order effect by launching this, and I hope that this is successful for a variety of reasons. And what this establishes is now hedge funds can do basically a so-called risk-free hedge between the US dollar with Stripe and the euro with Stream. That did not exist before because there was no currency pair that existed in a pref. So where does this go in 2026 to be blunt? In 2026, it's about digital credit. What I think Strategy is going to say is that they built these products for both institutions and retail shareholders in order to have a fixed dividend type, which is great, which is 9.2. The effective yield is shown here is 9.2% and 10%. That's the goal that they said for this, and that is 100% correct. My interpretation of the second order effect is they've now made a way by using preferred equities to basically do a foreign currency yield. And this did not exist until, and this, as we're recording this on November 4th, this is not available yet. But if I wanted to go long US dollar and short stream, I could now set that pair trade up. And if I want to do the reverse, I could do that. The other thing is that stretch, STRC, is the new 10-year reference rate. So stretch is basically is going to be this floating coupon. These are fixed. Stretch is floating, which makes it different. So I think you're going to see now you have this so-called three-way relationship going on. And I just drew it really quickly. I'll do a better real drawing of this and post this up. So basically understanding this, I think that this is a game changer. I think their narrative to both Wall Street and shareholders is correct. But I think the second order effects is more exciting for me. And once these, we're seeing also today, stretch has hit its par value of 100. Let's see what it closed at. So it closed right now. And if we look at, closed at 99.74. So my belief is that stretch will continue to basically trade about $100 and we're off to the races. What do you think, Dan?
I totally agree. It's really interesting, and I'm having to learn the international exchange markets, Euro USD on the fly here. But I think it's going to be interesting to see how these things are priced in Europe right off the rip, especially because the discount at par value based on the currency swap between the euro and USD is there. So what he's giving about a 21% discount on STRE relative to STRF at par. And so there's going to be a credit spread between STRE and STRF. And that gets into some of the details of where this sits in the capital structure. And we can discuss that. So here's the discount of STRE relative to STRF. Now, mind you, STRF is this crown jewel product. No other preferred equity can be issued above it in the capital structure, if you read the prospectus. Whereas with STRE, they're allowed to issue preferred equity above it in the capital structure, so it's closer to strike. Same with stretch. There aren't going to be any senior preferred equities above stretch or between stretch and strife, but above STRE, there may be a different currency, for example. But there's still a massive, 210 basis point spread adjusted for the currency swap, or the difference in the risk-free rate between Europe and the US at par. And then this is probably going to be, it might be issued at a discount, but this is going to be difficult for a lot of investors to kind of target from the US. So he's making it attractive like he's made all products attractive. And the tax-free yield is massively important, especially in Europe. Go ahead, Grant.
Go back to the previous slide. Look, this slide actually says this, that it's at a 21% discount. What I've said before, and I truly believe, when the market, excuse me for 1 second, when you have a big spread, when the market is inefficient, and in this case, it's a new offering, excuse me, when you have this new offering and it's a discount, automatically that's going to be hedged. So for the institutions, they're going to look at this, wow, we can go short STRF and go long STRE. Again, it sets up your currency pair, but because one is net new. And so they're looking at this 21% discount, which is written right in here. And so I think that's very appealing to the institutional investors. Um, the retail shareholders are like, whatever this gets priced at, it's going to get run up based upon what I just said, because they want this to peg and or to continue to run up until it gets this stable fixed yield. So I think that the market is pretty excited about this product. Go to the next slide where you show the spreads. One more slide, I believe. Yeah, this one right
Currency
here.
swaps? Yeah.
Well, if you look right over here, and this is where I don't think it took a big leap for me to figure this out. These are USD swaps curves. These are written in here in Euro swap curves. So what they've done is, look, there's a lot of talk that goes on about tokenizing equities or tokenizing real estate or tokenizing something in the traditional market. What strategy has done, Michael Saylor, executive chairman, is he's done the reverse. He's equitized Bitcoin with prefs. He's like, you know what? It's going to take such a long time to tokenize all these things. It's better if I take Bitcoin, strip out the volatility, make it as an equity, equitize it instead of tokenize it, equitize it, and have it appeal to the existing institutional players. And they're like, oh, this is just another preferred equity. And by the way, it's a perpetual yield. And so there is no refinancing on this. And so I think that he took a different route. And I think that this is huge. And then he's showing you your historical 10-year swap rates. Now, this may all look like, well, this is all Greek to me, but this is all common for institutions to understand. So I think this is big.
And what does this swap rate tell investors, or for anyone who's not necessarily going to institutions going to trade this? What does this mean? It just means the risk-free rate in Europe is lower than that in the US. So the yield on STRE to be equivalent to STRF will be less based on the different jurisdiction, right? So a 9% equivalent yield. So Strife has a 9% equivalent yield. The equivalent yield of STRE in Europe is less because the risk-free rate is less. And that's how bonds typically are priced. It's the credit spread above the risk-free rate at a specific duration.
Yeah, and I think there's another slide. If you keep on going forward, there's a slide that shows, this one. So we're talking a couple different things. We're talking a currency swap. And by the way, 200 bips, which is 2% in the currency space, is massive. I think that those trade, sub 25 bips, and we're talking 200. So there's an 8x difference in the currency of this. Now, if you look at this based upon the prefs the bonds that are out there in the ratings, and I get that the prefs are not rated, but you've got this at Stream is basically, he's saying it's B minus for the company, right? And the liquidity on this is huge compared to it.
Which is
But if you look
different
at
than the product being rated, right? For people watching, that's there's
absolutely
two different things, which I had
two
to learn
different
as
things.
well. Yeah.
Yeah, the two different things. But if you look at the effective yield, it's 10%. It's almost basically, I guess if you would take the average of that, it's almost about double the effective yield. And the US tax equivalent yield based upon ROC, return of capital, it's at least a solid 2.5x of what that average is. So that is massive. And then the amount issued. So I think that we're going to see, my guess on Stream, I think, look, sandbagging is not a secret. They said it's $400 million. I think it doubles. They right over there, it says 350. Sailor always has talked about, hey, we did a green shoe. You know, 3 years ago when he first started talking about it, I'm like, what the heck is a green shoe? A green shoe is when you're oversubscribed. So what do you do? Look, I've been in business for 25 years. When you're in sales, you always sandbag. You always say, hey, this is going to be my sales number, and then you chop it by 20%. And then when you hit it, you then are oversubscribed and you did it. None of this is illegal. This is just common business sense. So they show this at 350 million euros. I wouldn't be surprised if they double this. And basically that question came to Fong Lee. How are you going to get to 2 billion by the end of the year to get your 30% Bitcoin yield? And he's like, I got 60 days.
Yeah, a billion of
I,
this, billion of the euro of the Canadian one. Yeah, you're
a
done.
billion, a billion of this, a billion of that. Stretch now has hit $100. I think that continues to run up. It's the most successful IPO of 2025. So I think my view is these products are not designed for Bitcoiners. They're designed for fixed income people, and that market is huge. Call out to Jesse Myers, Croesus. It's whatever. It's a $300 trillion market cap for bonds. I think that these are great products. In my view, that what it's doing to displace the bonds based upon the metrics that we just showed you.
It's
Again,
also
not
another
financial.
pump into Bitcoin. And I think this brings up Saylor's model. I'll bring it up in a separate image, but he's actually been putting forth pretty conservative models. If you look at the initial Bitcoin models that I'm going to close out of this.
Yeah.
If you look at the initial Bitcoin models that Saylor puts forth, I mean, his forecast was 100K by end of 25, 140K end of 26, 175 or closer to 200K end of 27. So he's realizing this thing is going to start trading like an actual, credit-worthy instrument, an asset. in the market. It's no longer going to do these like crazy cyclical up down. It's going to have pullbacks and blow offs a little bit, but that's how it's going to start trading. And so the fixed income investors are going to use this as collateral. And the future is Bitcoin as collateral. It's like I think of it like the S&P for the future. I really think that's how it's going to be used.
I agree with you. I'm going to pull up one other slide right here, and then we'll talk briefly about SATA, and I think that becomes interesting, talking about what Strive has done. So I'm pretty excited about what they're doing there. Do you want to talk a little bit about that while I find the slide that I'm looking for?
Yes, absolutely, Grant. I'm pulling up the free writing prospectus too, so we can have it once we talk about SATA. But SATA, what the boys at ASST, and again, like I mean, we don't get paid by ASST. I don't get paid by ASST. Um, the point
Oh, I want
is,
to be clear about that. We are not employees of Strive at all, and we don't have, we're not beholden by anything. They don't tell us what we could say whatever we want to say. We can comment about them, and to be honest with you, they kind of like that because we're not employees of the company. Therefore, we can say what our analysis is. So I don't want people to think that we're employees of Strive at all because we are not.
yeah,
Go ahead.
exactly. And so when you look through, the way they've created this product, the pitch is we only have one senior equity in the capital structure, preferred equity in the capital structure, no converts. It's essentially stretch, but there's no strife or convert sitting above it. They can call it at a certain price. I think it's like 110. And there's no risk of the moving liquidation preference that we talked about with strife against the common in kind of a bear market liquidation scenario. But it is a really, I think, interesting product. There's going to be some arb between SATA and Stretch now that you can collect the X dividend on SATA on the 1st, whereas the X dividend's the 15th on Stretch. I don't think that was a mistake. And then, but you still have a pretty heavy over collateralization of Bitcoin. And so, something Grant and I talked about last night, I think is really important, is people are like, they all hate the Bitcoin treasuries. They're like, screw these guys. They fuck me on my common. Like, I hate them, whatever. But common equity is a lot different than these preferred products because the preferred products are much closer to debt. The common, it's speculative. You really have no claim over the assets unless liquidation. You have a second claim over the assets, but you have very little claim. With preferred, you have claim over that perpetual dividend, and that perpetual dividend for the company to stay in business must be funded by the Bitcoin. So there are investor protections written into the prospectuses of all of these different products that the common shareholders don't have. And it makes it such that the actual executives of these companies can't mess with your dividend. Like, it's encoded and written into these prospectuses. And if you believe in the SEC and upholding financial regulations of the United States, then these products are in fact money good. And that's a huge difference between the common equity and these preferred equities. There are massive investor protections that I think they still have PTSD from the common.
Right. And I want to talk about something from the strategy presentation that relates to what Strive did with their product SATA. So this is an interesting scenario. So let's see if I could share this correctly here. Share this window. Yes, it's working.
Looks good.
Uh, so what you're seeing here is, and this is in strategies uh, presentation. If you look here, at the very right below the title, it says assuming $110,000 Bitcoin price, 44% BTC volatility, and 0% BTC average rate of return. This slide is saying, and it's called the skeptic. If Bitcoin doesn't even have a return, this is the crazy part about this. Just because of the 44% volatility on Bitcoin, they could still sell the volatility to Wall Street in order to pay the yield. This is a critical part to understand. This is something that I did not get um, a week and a half ago. I looked at the prefs as a perpetual liability that they had to pay, obviously in perpetuity, paid by the common shareholders. I am not happy with the way the price went for the common shareholders with Bitcoin treasury companies, strategy included. That question was asked to Saylor. He said his answer. Ben Workman asked that question. Saylor said the answer on this. What I believe now is that from understanding the way that these markets, these prefs work, even if Bitcoin were to stay zero and the volatility is still there, they're going to sell that volatility in order to generate yield that'll happen by being able to do these in the prefs. And what Strategy has is they have enough Bitcoin in order to do this. What Strive has is that they're the second Bitcoin treasury company to launch a pref. There's a race to launch these prefs, but you have to have a clean enough balance sheet to do it. Some other Bitcoin treasury companies took out loans against their Bitcoin, which is not conducive to doing this. And so
Exactly.
having permanent equity, and the permanent equity means, this is the part I didn't get, was that you never have to refinance, right? If you have permanent equity, right? If you have a convertible bond, at some point that bond is going to have a duration. They talked about this, and those bond holders will then convert to shares. And then if your strategy is not going to do converts again because they're delta hedged. What's going to happen is if you have a clean balance sheet and you could jump to the preps, you never have to worry about the refinancing. You don't have to worry what's going to happen in 3 or 5 years. Whatever the price of cost of money is, you don't have to worry about it because it never refinances. And so that's how I changed my mind about the prefs. Do I own any of these? No. Do I think that they're great? Yes. Do I want them to be successful? Absolutely. Because as these are more successful, it stops them from doing the common stock ATM until you get a positive MNAV. So I think that this is a critical piece. I think that saying something's going to stay at zero return and putting that in here and saying that you can show your BTC credit, you can show your market cred, you can show your spread premium. I didn't make the slide. This getting It's one thing to create the slide. The other thing is you got to get this past your legal department to make it public information. So from my view, I'm looking at this as, I don't know what's going to take 3 months, 6 months, or a year, but these preferred instruments for Strategy, I believe will be very successful. And that successful part on that will help raise up the common stock.
Yeah, I totally agree, Grain. And it really has broader implications for the credit markets on the whole. Like if because it's fully liquid and transparent collateral, you can update how much of your portfolio you want in a Bitcoin backed bond. And then, portfolio managers can adjust in real time. So I think these will serve a purpose, especially with a rating for Strategy.
Yeah, I'm looking for a particular. I'm going to switch to this earnings slide, and then we could wrap it up today. We said we would do a kind of short, but I think this is the appendix. You got to, it's kind of crazy that there's 100 slides and trying to memorize them. I know which one I want to go to, but once I find it, I'll show you which slide I liked, and then we'll wrap it up from there. So it's going to be, aha, this is the slide. This is the slide I'm looking for. When I saw this slide, it's your typical funnel. And this, what it shows by the funnel is saying, what's the addressable market for having the rating? So if you look at it, the incremental access to a $4.9 trillion market. So I think that's the key part here, is that because the company, not the preferred, but the company got a B- rating, it now goes into the incremental access, which is almost a $5 trillion market. And they only have about $8 billion of these outstanding. So from that perspective, in product management, my career was, what's the total addressable market? They have such a small percentage of this. This can grow incredibly fast because it's such a small percentage of that market. And so this is why I'm bullish on the prefs, even though I don't own them. But I do think for the right type of investor that's looking for a yield, this makes a lot of sense. So I think we should wrap it up from here. Dan, you give your closing thoughts.
Yeah, I think that's pretty much covering it. We're going to do a lot more of these, more spaces, just more content moving forward. Digital credit, we believe, is the future of Bitcoin and how it's going to play a larger role in the capital markets. It's no longer perpetual futures trading. It's digital credit.
Yeah, I want people to realize, I know I always go on and on. So the digital credit will be the buzzword for 2026. And I think that people, once they understand this, again, it's about equitizing Bitcoin, not tokenizing uh, uh, equities. I think that the way strategy is doing this is much faster time to market, and these are already out there. This is going to be their fifth pref, and then you're going to have the sixth pref, which will be Strive's SATA, SATA. So I think that this is exciting times. So thank you for everybody for joining. We'll do this at least once a week. And if you have an idea that what we should name this besides the Mike and Dan show or Grain and Dan show, please let us know. And you got two coasts. You've got San Francisco and you've got Miami. Doesn't get any better than that.
Exactly. All right, guys. Thanks for watching. Talk soon.
Thank you.